Hello everyone and welcome back to the sessions on economics for finance. Now in this class we are going to get started with chapter 2 of your syllabus, that is basically titled as public finance. And friends, this is a chapter, believe me, there is not too much of concept that I have to discuss with you. The only thing that I can do for you is to give you a bit of guidance and short notes for you to have a comprehensive understanding of this. In your own interest, I would recommend that you can prepare this from your ICAI study material, but the only reason that too much of note content is given in ICAI study material, lots of pages, I would recommend you to just flip those pages and make sure that the short notes that I have given to you are covering almost every aspect, but these notes are given in shorter form so that you can have a complete understanding as well as not to spend too much time on this. Now from examination viewpoint, this is a little lesser important topic as well, but all the MCQs given at the backside of your ICAI study material must be covered by you along with the notes that I'll provide you here in the class. So as I told you, not much to explain in terms of concept. Public finance is all about fiscal policies and other related stuff. So when we talk about fiscal policy, so if you see, there could be monetary policy, trade policy, where lots of conceptual discussion gets involved. Fiscal policy is basically government's policy. Now government policy will be mainly affecting three specific areas, and that is defining the scope of government in an economy. So what role a government has to play in an economy from micro and macroeconomic viewpoint, that is what we have to mainly understand, and other part will be writing up short notes in this aspect. So what we do is, when we begin with this, we will get started with each unit one by one. The whole chapter is divided into 4 units and we will be taking one unit at a time. So let us begin with the first unit discussion right away. This first unit is titled as fiscal functions, and once you write this heading in your notebooks, I start providing you the notes further. Now friends, under this unit 1, that is fiscal functions, what you begin with is the first fundamental point that I have just discussed with you, role of government in an economic system. The functions of government are separated into 3. First one is resource allocation, that indicates efficiency of the government. Second is the income distribution, which indicates the fairness from the viewpoint of government, that is how fairly the income is distributed across the nation. And the third very important function is macroeconomic stabilization. If you can observe one thing, points A and B, that is resource allocation and income distribution, are more of microeconomic aspects, whereas the C point, that is stabilization, it is basically macroeconomic stabilization. Now you may write this line as well, that the resource allocation and income distribution functions are microeconomic functions and stabilization is a macroeconomic function. So write up these things and then I take you ahead. Alright friends, once you have finished writing this much, let us move ahead and continue writing further. The resources allocation function aims to correct the sources of inefficiency in the economic system. The income distribution rule ensures that distribution of wealth and income is fair. Monetary and fiscal policy, the problems of macroeconomic stability, maintenance of high levels of employment and price stability, etc., fall under the stabilization function. So what we do is we first start with the first function, that is the allocation function. Let us write something about this. Resource allocation refers to allocation of factors of production to the various uses. It is optimal and efficient allocation of available resources so that resources are put to their best use and no wastages are there. So please write up this much and then I take you ahead. Alright friends, once you have finished writing this much, let us move ahead and continue writing further. Allocation of resources is based on demand and supply in market. In absence of government intervention, market failure may occur. It means resources are misallocated by too much production of certain goods and too little production of certain other goods. The main purpose of allocation function is maximizing social welfare. So please write up this much and then I take you ahead. Alright friends, so once you have written this much, let us move ahead and continue writing further. Reasons for market failure in proper allocation, imperfect competition and presence of monopoly in the market which reduce welfare of consumers, failure of market to provide collective goods which is consumed commonly by all the people, externalities exists, and factor immobility which causes unemployment and inefficiency, and imperfect information, inequalities in the distribution of income and wealth. All these are reasons for market failure when it comes to proper allocation. So please write up these points and then I take you ahead. Alright friends, once you have written this much, let us move ahead and continue writing further. Instruments for allocation function. There are many instruments by which government can perform its allocation function, some of which are as follows. Government can directly produce goods. Government may influence private allocation through incentives and disincentives. Competition policies, merger policies which affect the structure of industry and commerce, regulatory activities such as licensing, control, minimum wages and directives on location of industry. Government sets legal and administrative frameworks. So please write up this whole thing and then I take you ahead. Alright friends, I'm sure you have finished writing this whole thing. Let us move ahead and continue writing further. Government contributes to distortions. Sometimes government may contribute to market distortions. Reasons are inadequate information, conflicting objectives, administrative costs in government intervention. Now friends, before I give you any further notes, let me summarize this first function, that is the allocation function. So allocation function, what exactly it is, if I summarize this whole discussion, it is all about allocation of resources in the most efficient manner. Now what happens, for example, there is production of coal and petroleum in India. Now what will happen, just imagine that one particular company that purchases the whole of coal production in India. What will happen, other people will not have supply of coal. So can government let it happen? No, it cannot. Just imagine that all the fuel available in the country is purchased by one particular organization. Will government allow this? If this is happening, then what will be the case of production system across the nation? People will be having severe shortage of one particular commodity. On the other side, one particular organization or few organizations taken together will be having bulk availability of such commodity. This is what we call as improper allocation, and the objective of government is to have proper resource allocation so that the smooth production of goods and services happen across the nation. Now let me take you to the next function, and again what I'll do is I'll first give you notes on this and then we will summarize the whole point in a while. So write the next heading as distribution function. Distribution function is concerned with the distribution of income and wealth so as to ensure distributive justice, equity and wealth. When there is high inequality in distribution of income and wealth, government intervene for distributive justice and wealth. So please write this whole thing and then I take you ahead. Alright friends, once you have finished writing this much, let us move ahead and continue writing further. The objectives of this function: achieve an equitable distribution of social output among household, advancing the well-being of those members of the society who suffer from deprivations of different type, providing equality in income, wealth and opportunities, provide security for people who had hardship, ensuring that everyone enjoy a minimal standard of living. So please write up these points and then I take you ahead. Alright friends, let us move ahead and continue writing further. Instruments for achieving this objective could be taxation policies, financing public services for the benefit of low income households, employment reservations and preferences to protect certain segments of population, regulation of the manufacture and sale of certain products to ensure health and well-being of consumers, special schemes for backward regions, etc. So please write up this whole thing and then we move ahead. Alright friends, so let us move ahead and summarize this whole matter. That is the second function. There should be optimal budgetary policy towards any distributional change so that there should be proper trade-off between efficiency and equity. This function should be accomplished with minimal costs by carefully balancing between equity and efficiency objectives. Now quickly write up these a couple of points and then I take you ahead. Now friends, before I take you ahead with the next function, let me summarize this distribution function and what is the role of government in this regard. So what I would just try to explain you is, if you just look at the taxation system in our country, it is designed in a way that talks about fairness in income distribution. So what happens, up to a certain limit of income earned by an individual, that income is completely exempted from tax. That is, no tax will be levied on income up to that limit. So that is the first slab with a zero tax rate. Only when an individual is earning beyond that limit, the individual will be taxed. Now that is a fairness thing, right? There the government is having a clear intention that we will not be collecting taxes from someone who is earning low income. On the other side, individuals having high income, they will fall under the bigger tax rate slab or a higher tax rate slab. So in India, the taxation system is up to a certain limit, no tax. Thereafter, tax will be in the range of 5 to 10%. Thereafter, tax will be in the range of 10 to 20% and so on. So what happens? You know one thing, that the tax bracket goes on increasing, and you would have learned this in your income tax subject very well, the slabs of tax. What I am trying to tell you is not what are those slabs of tax, but how to interpret that system of taxation in India to indicate government's objective of fairness in income distribution. So what will happen? Suppose there is an individual who has earned very low income and is belonging to a poor class. On the other side, another person, another individual has earned huge income. So tax department will be collecting a substantial portion of revenue in the form of income taxes from this person who has generated huge income, and will collect no tax from the poor person. On the other side, this money collected from this rich person or the high income earner will be revenue for the government, and government will also spend this money. And when government is spending this money, it is spending this money in welfare. What kind of welfare? government will create hospitals and other facilities for such people who are from the poor background, and these people, without incurring cost, they can have medical facilities, without incurring cost they can have education for their children. That means what is happening? From a high income earning segment, the money is drawn and it is given as an aid to low income earning segment, and as a result both of these individuals would be having fairness of income distribution, and that is the objective of this distribution function. So let us move ahead and let me take you to another function, and that is the last one over here. Alright friends, once you have finished writing this much, let us move to the last function, that is the stabilization function. Instability in economy mainly arises due to business cycle. The market mechanism is limited in its capacity to prevent or to resolve the disruptions caused by the fluctuations in economic activity. In the absence of appropriate corrective intervention by the government, the instabilities that occur in economy in the form of recession, inflation, etc. may be prolonged for longer periods, causing enormous hardships to people, especially the poorer sections of society. So please write up this much and then I take you ahead. Alright friends, I am sure you have finished writing this much. Let us move ahead and continue writing further. It is also possible that a situation of stagflation, that is a state of affairs in which inflation and unemployment exist side by side, may set in and cause a huge problem. The stabilization issue also becomes more complex as the increased international interdependence causes forces of instability to get easily transmitted from one country to other countries. This is also known as contagion effect. The stabilization function is one of the key functions of fiscal policy, and aims at eliminating macroeconomic fluctuations arising from suboptimal allocation. So please write up this whole thing and then I take you ahead. Alright friends, once you have finished writing this much, let us move ahead and continue writing further. The stabilization function is concerned with the performance of the aggregate economy in terms of labor, employment and capital utilization, overall output and income, general price level, balance of international payments, the rate of economic growth, and you also write one more thing over here, that is components in fiscal policy, overall effect generated by the balance between sources of resources like taxation, borrowing, etc., and use of resources, that is government expenditure. And next one will be a microeconomic effect generated by specific policies it adopts. So please write up this much and then I take you ahead. Alright friends, so once you have finished writing this much, let us move ahead and continue writing further under the heading implementation of stabilization function. Stabilization function implemented through monetary policy or fiscal policy. Now what is the role of monetary policy? You are going to cover this in chapter 3. Increase or decrease in money supply or interest rate to affect inflation, output, consumption, investment, etc. I told you, you are going to cover this whole aspect of monetary policy under chapter 3. Now fiscal policy, that is the role of this particular topic. Government expenditure policy and taxation policy to affect economic activities like production, investment, savings, inflation, income, demand, etc. Expansionary fiscal policies adopted to end recession, and contractionary fiscal policy is resorted for controlling inflation. So please write up this whole thing, and that would be end of this session.